Formal announcement of demonetization of high currency denomination notes of 500 and 1000 worth nearly 15.4 trillion took place on November 8, 2016. The move in India aimed at curbing corruption, black money, eliminating counterfeit currency, and terrorism funding. Alongside, it aimed at the promotion of a cashless economy mainly through digitization, converting the informal economy to a formal one, increasing the scope for financial inclusion, enhancement of financial savings, and larger scope for strengthening of treasury accounts of the government, ultimately to be utilized for financial development. Economic rationale behind the move is generally attributed to three factors: controlling hyperinflation, removing counterfeit currency, and widening the tax base. India depends primarily on cash-based transactions, and only 10-15% of the population are non-cash users. Also, the ratio of currency in circulation outside of banks to GDP is 11.1%, higher than the other emerging economies like Russia, Mexico, and Brazil. As per the monetarist view, the effect of demonetization on economic activities and stock market is related to the fall in interest rates. However, the real side impact of any demonetization move will also depend upon the relative share of connected and unconnected sectors of the economy. Demonetization has led to increase of cash flows in the banking system. The credit deposit ratio remains stable in past couple of years. Similar behavior is noticed for investment deposit ratio as well. The ratio of public currency to narrow money had declined to 40% by the end of December 2016. It can be inferred that demonetization has helped in reducing the cash in hands and improved the deposit base, which may be fruitful for the banking sector to maintain capital requirements amid the new accord of Basel III. Growth rate was 9% in fourth quarter of 2015-16 and came down to 6% in fourth quarter of 2016-17, and growth has remained stable at 6% thereafter. The adverse impact of demonetization move is apparent for the industrial sector, with its growth coming down to 0% in first quarter of 2017-18, which generally had been around 10% in first quarter for each of the past 3 years. Services sector has remained unaffected and reported stable growth. Inflation measured through Consumer Price Index and CPI for industrial workers has remained around 10% during the 2012-13 and reached around 4% in the third quarter of 2017-18. This clearly shows that inflation level has eased after the demonetization move. The year-on-year comparison states that WPI showed negative growth during 2015-16 and reported positive growth after the demonetization move. One observation can be made that the tax revenue in absolute terms over corresponding quarters of every year is rising. If we see the growth pattern, the tax revenue has improved, which favors the positive impact of demonetization. But measured in ratio terms, the tax revenue receipts have not increased considerably, and hence demonetization doesn't seem to have had much impact. For year 2015-16, the exports as well as imports growth rates have appeared negative, however shown positive growth during the period of demonetization. In the quarter following demonetization, the growth has fell down drastically but later revived and stood well above 10% in the first 3 quarters of 2017-18. These statistics indicate that demonetization didn't have much adverse impact on India's trade performance. The impact of demonetization was also seen in the rural and informal economy. As per the report of India Ratings and Research, INRA, borrowers were unable to meet their dues as earning members lost on average 1 to 3 months' wages or income due to demonetization in the financial year 2017. Digital transactions gained momentum in the quarter immediately following demonetizations and then stabilized. Even the volume of paper clearing in post-demonetization period remained the same as their levels in 2014-16. It can be concluded that demonetization appears to have resulted in increase in digital transactions, which however could not be sustained. The enormous move of demonetization has invited much attention of policy practitioners on both grounds, positive as well as negative. The descriptive analysis carried out in the study highlights a mixed response about the impact assessment. It can be inferred that demonetization has helped the banks in improving the deposit space. However, credit growth has been much lower in the past year as compared to the previous levels. In sum, it can be argued that the impact of demonetization was noticed in the initial quarters following the move. However, the economy moved back to previous levels very quickly, reflecting its robustness. This was akin to the resistance capacity exhibited by the Indian economy during global financial crisis. A stable demand growth has been the driving factor for the Indian economy, enabling it to absorb the adverse impacts of such economic shocks. Slowdown in the investment growth is a key concern for India, which needs to be revived to help the economy move on a higher growth trajectory. Thank you.